The Q3 FY25 result season is going on. You may have come across a few results too that hogged the limelight. It might have been Zomato, whose net profit fell by over 57% year on year, thus denting the company's turnaround prospects. Or Kotak Mahindra Bank, which posted stellar set of numbers and surprised the street. Or Hindustan Unilever, whose disappointing numbers reflected in the ongoing pain in the consumer space. Now, these are frontline companies and the media amply covers their results. So we're not going to discuss such companies in this video. In this video, we will tell you 5 lesser known companies of the BSE 500 index that have posted blockbuster returns in Q3. Hello and welcome to ET Money's YouTube channel. Amid the ongoing choppy market conditions, these companies are enjoying favorable tailwinds which could make them a worthy contender for your portfolio. Now, in addition to their Q3 performance, we will also talk about these companies' businesses and what resulted in their outstanding performance. But do know that none of the companies we are going to discuss are our recommendations. The idea is just to highlight their recent performance and its reasons. Now, the information in this video can serve as a starting point for further research. If you do want to invest in these companies, do your own due diligence and research them thoroughly. This video belongs to a result updates playlist. You can check it for similar videos. Okay, let me start with the first company. No, this is not the electric two-wheeler maker Ather. Ather is not even listed. Ather Industries is a chemical company that produces advanced intermediates and specialty chemicals for many industries. This company claims to combine chemistry, technology, and systems to provide superior products and services. Now, in Q3 FY25, the company's 49% of revenues came from large-scale manufacturing, which includes advanced intermediates and specialty chemicals with application across industries. 38% of revenue arose from contract and exclusive manufacturing for MNCs. 11% of revenue originated from CRAMS or contract research and manufacturing services. Now, CRAMS is outsourcing of research and development services by large pharma companies to third parties such as Ather Industries. Now, in Q3, Ather sales grew by 41% year on year from 155 crores to 220 crores. Its net profit soared from 17 crores to 43 crores, and its operating margin expanded from 27% to 36%. Now, what's responsible for this stellar performance? Well, in the earnings con call, the management pointed at volume growth across all its business units amid stable prices across the product range. The company expects an uptrend in its prices that could positively impact its future quarters. Now, it added 8 new clients during the quarter. One of its manufacturing sites, which was affected by an accident, is back to full capacity. Now, the company has commissioned a 15 megawatt solar power plant for captive use, which is expected to help the company save 15 crore annually in energy costs. Now, Ather's market cap is about 11,000 crores. The stock has remained almost flat over the last 3 months and a year. It trades at a pricey valuation of 102 times its last 12-year earnings. Now, if you would like more fundamental data about this stock and the other stocks in this video, you can head over to the ET Money app. Here, you can search for the company whose financial data you want. You can then go to the financial section where you can find the balance sheet, income statement, cash flows, and financial ratios for multiple years. You can also check the company's shareholding, peer comparison, technicals, and corporate actions. Okay, let's now take a look at the next company. Capri Global Capital is an NBFC that claims to bridge the credit gap for unbanked and underserved customers across northern and western parts of the country. Capri provides various loans, including MSME loans, home loans, gold loans, construction finance, and loans to other NBFCs and fintech companies. Now, as of Q3 FY25, the company's AUM stood at over 20,000 crores. Gold loans formed the major share at 34%. Next were MSME loans at 24%, followed by housing loans at 22%, construction finance at 18%, and indirect lending at 1.3%. Now, the company's AUM is dominated by retail loans, which constitute 80% of the total loans. The company's Q3 results show that sales jumped from 579 crores to 806 crores, a 39% increase. Net profit grew from 68 crores to 128 crores. That's a hefty 88% jump. Operating margin increased 9 percentage points from 55% to 64%. Now, a strong business performance underpinned this spectacular financial performance. On a year-on-year basis, in Q3, the company's AUM was up 55%. Its disbursals rose 52% to 5,839 crores. Housing and gold loans were up 31% and 196% year-on-year. A newly launched loan against property product called Micro LAP crossed 150 crore in AUM in just 2 quarters. Now, the NBFC's net interest income, which is the difference between the interest earned and the interest paid, grew 41% year over year. The company improved its operational efficiency during the quarter by reducing its cost to income ratio to 58.3% from the peak of 70.5% in Q4 FY24. Now, it also managed to raise capital at a lower cost, reducing its credit cost by a massive 55% year on year. The company's asset quality also improved, and the net bad loans fell from 1.4% to 1% year on year. Now, it pushed the expansion pedal too by opening 69 more branches as compared to its branch count in Q2 FY25. Now, as far as the Capri Global stock is concerned, the company has a market cap of over 16,500 crores. The stock has fallen over the last year by 16% but has risen by about 10% in the last 3 months. It currently trades at a discount to its median PB, but a PB of 4 appears to be on the higher side in absolute terms. Okay, let's now talk about the third company. Part of the Shapoorji Pallonji Group, Sterling and Wilson Renewables is a solar EPC and O&M solution provider for utility scale, rooftop and floating solar power projects. Now, EPC stands for Engineering, Procurement and Construction. EPC companies undertake projects for their clients and deliver them according to the requirements. O&M stands for Operations and Management. O&M companies operate and maintain existing infrastructures. Now, as of Q3, the company's EPC portfolio was 21.7 gigawatts and its O&M portfolio was 8.8 gigawatts. The company also provides hybrid and energy storage solutions. In Q3, the company's revenue shot up by 215% year on year from 583 crores to 1800 crores. The company also posted a profit as compared to a loss of 62 crores in Q3 last year. Its margins also expanded by over 2 percentage points. Now, the company's quarterly revenue is its second highest since listing in August 2019 and the highest post COVID-19. In its earnings call, the management attributed this performance to the scaling up of its execution capabilities and better operational leverage. Operational leverage measures how well a company converts its revenues into operating income by keeping its costs steady or actually reducing them. The company also highlighted fairly heavy project tendering activity, which shows the strong underlying demand from both PSUs and the private sector. The company's O&M margins were steady at 25%. As more EPC projects turn into O&M projects, profitability is expected to improve as O&M projects tend to have better margins profile than EPC projects. S&W Renewal has an unexecuted order book of over 10,000 crores as of Q3. It has bagged 2 new orders worth 1,400 crores in Q3. Now, the company hopes that 21 gigawatts of projects will be awarded in the next 6 to 9 months. It expects FY26 to be even better than FY25. Now, as far as the stock's performance is concerned, the stock has lost over a third of its value in the last year and 43% in the last 3 months. The company's PE is pretty high primarily because it's a turnaround case. This is the 4th consecutive profitable quarter for the company since December 2023. Now, whether this quarter's results and the strong business outlook fuel the stock price remains to be seen. This brings us to the 4th company. But before that, do subscribe to the channel if you haven't yet. And don't forget to press the bell icon so you never miss a video from us. Sunteck is a luxury real estate developer focused in the MMR or the Mumbai metropolitan region. The company has a portfolio of about 52.5 million square feet spread over 32 projects, of which 18 are completed. The share of residential real estate in its portfolio is 80% and commercial and retail comprise the remaining 20%. Its residential brands include Uber Luxury, Ultra Luxury, Premium Luxury, Mark Luxury and Aspirational Luxury. Its commercial and retail properties include Sunteck Promenade, Grandeur, Kanaka, Pinnacle, Icon, Crest, etc. In Q3, the company sale grew by a massive 281% year on year from 42 crores to 162 crores. The company posted a profit of 43 crore against a loss of 10 crore in corresponding quarter last year. The margins improved over 4 times from 8.8% to 38%. Now these numbers were driven by strong demand for the company's projects. In the company's earnings call, the management revealed that it has strategized a higher sales contribution from its uber luxury projects, which have very high embedded EBITDA margin. In Q3, the company's pre-sales growth was 40%, which was higher than the guidance of 30 to 35%. In real estate, pre-sales are when a buyer commits to buy a property before it's built by paying a token amount. Now, as of 9 months ended December 2024, the company's gross development value or GDV stood at 40,000 crores. GDV is the total value of a project when it is fully completed. Now, the management is confident of its business development pipeline and similar growth in the future, along with high operating margin. It expects Q4 to be the best ever quarter till date for its pre-sales. Now, as far as its stock is concerned, it has corrected by about 17% in the last 3 months, but has delivered over 7% in the last 1 year. The company's PE appears to be quite reasonable now as compared to the 5-year median. And this brings us to the last company of this video. Tejas Networks provides a variety of networking products and solutions, including radio access network, fiber broadband access, SATCOM solutions, switching and routing, direct-to-mobile broadcast, etc. The company's products are used across technologies like 4G LTE, 5G, Open Radio Access Network, AI, ML, SATCOM, etc. Tejas also offers networking-related building, managing, and consultancy services. In Q3, the company's revenue rocketed from 560 crores to about 2,500 crores, a growth of 346% year on year. The company generated a profit of 166 crore against a loss of 45 crore in the corresponding quarter last year. The margins rose from just 1.4% to 14.6%, a 10-time rise. Now, Tejas' numbers were driven by high demand and deal wins. The management said that the company has completed RAN supplies for over 27,000 sites in Q3 for BSNL's 4G, 5G network. RAN or Random Access Network is a key component of a wireless telecommunication system. Tejas also started major engagement with multiple international operators for high-power 5G radio. It signed a 3-year contract with Vodafone Idea for supplying equipment for its pan-India 4G and 5G mobile backhaul network. Similarly, the company won orders in Tamil Nadu, the US, and from one of the Asian customers. However, the company's performance was muted as compared to the previous quarter. The management attributed this to change in product mix, certain provisions for old inventory, and higher depreciation for certain R&D equipment. The management gave clarification regarding the receivables of 4,700 crores and hope they will come down as collections go up. The company collected 2,000 crores in Q3. Now, as far as Tejas stock is concerned, the market cap stands at over 17,000 crores. The stock has fallen by about 25% in the last 3 months, but at 34%, its 1-year performance is impressive. The valuations also look reasonable as compared to the median. So, these were the 5 companies that have done exceptionally well in Q3. Of course, results are being announced every day. So, it's likely that by the time you watch this video, some other amazing results would have come out. But don't worry, we are keeping an eye on those and will present them to you in another video. For now, you can start researching these 5 companies using the ET Money app. Once again, don't consider any of the stocks discussed as an automatic recommendation. Do your own research and due diligence before investing in them. And with this, we have come to the end of this video. I hope you found it useful, and if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.